and welcome to Coin Engineer. As you know, we are in tough times and many bad events happened recently. And with the latest events happened in crypto, I call it 1929 of crypto. The sentiment is nearly the same as the crisis happened in 1929. In this video, we will talk about the recent events, why did they happen, and what will happen next. Before we start, please subscribe to our channel and hit the notification bell in order to get the priceless content for free every day. Also, you can ask your questions by sending comments to this video, or you can join our Telegram channels. You can find their links in the description of this video. If you're ready, let's start. As you know, everything started with the market crisis which has happened in March 2020 because of the pandemic. With all the shutdowns, supply shortages and panic, markets started to tank as well as people's sentiment. There were only one thing which could prevent this crisis to become a bigger one. And as you can see, it was a short-term solution with some consequences. The Federal Reserve started printing money out of thin air, which we call QE. The velocity of money is the main reason behind the inflation. While people were in their homes and not spending their money on goods, most of the printed money were going into markets like crypto and stocks. But when the pandemic is over and people started to spend their money on goods while the supply chain problems are still here, the demand shock happened. Prices of goods started going up because the supply couldn't fit the huge demand. And this created inflation. With the inflation numbers, which has never seen in the short history of the world, started to show up. Inflation rate of the USA became more than 8%. This means $100 became $92 in buying power. Within a year, Federal Reserve started acting and the interest rate started going up. This is the opposite of QE. They started to collect the money back, which they gave to people. At first, overpriced stock markets started going down. With the losses and margin calls happened there, big funds started liquidating their crypto positions in order to pay their margins on stock market. This caused a downtrend on cryptos too, and this is also why the United States stock market and Bitcoin has a high correlation. I bet it sounded really technical by far. Now it's time for the magazines, the real panic factors. With all those going on, a war started in the middle of Europe. Russia attacked Ukraine because of their political differences. Then all the Europe and USA started a Cold War against Russia. History repeated itself. This made the markets drop more, but it's not everything. When the Bitcoin dipped and trying to recover its losses, the Luna crash happened. The so-called stable coin of Luna, which is USD, lost its peg against the United States dollar and started falling down. This happened because of the low volumes, high bad debt in the Luna ecosystem and the over-leveraged nature of USD. When the panic started, everyone tried to move their assets from Luna ecosystem. This brought liquidity crisis with itself and the panic started getting bigger and bigger. Everyone was selling their USD and Luna, and the worst part is Luna is using an algorithm which balances the USD price by minting and burning Luna. To make USD a dollar again, they started minting Luna in enormous amounts, and this caused Luna to fall down from $120 to nearly zero. And panic is not the only thing which Luna caused. Their foundation started selling their bitcoins and other altcoin holdings to find some liquidity and save Luna, but they only dumped the market more and created a bigger panic. And those are nearly everything which caused Bitcoin to drop nearly $25,000. But whatever happens, don't be upset if you're in a big loss. You can recover from your losses in time by learning more about the markets and by the market recovers itself. Never get into depressing mood if you love yourself. Your loved ones never want you to be in a bad mood. The most important thing in this life is them. If you feel depressed and stressful amongst these times, spend more time with your family and friends, try to make new friends, and find yourself other hobbies until your mental stability heals back. By this time, you can watch our free tutorials and learn more about the crypto market from experts. With all those spoken, let's see where Bitcoin is at the moment. We managed to stay in the falling wedge formation thanks to today's daily candle close with huge buying pressure. You can see the falling wedge formation by the white lines on our screen. And we are trying to bounce back a little bit upwards. If we manage to break those two possible bounce resistance, which I have found with my Fibonacci tools and marked with the red boxes on my graphic, there is a high hope that Wolfie formation will be activated and Bitcoin will reach to this yellow line, which is nearly at $50,000. I have pointed the target yellow line with my green arrow. But don't forget, if we can't break the red boxes, we will not reach the yellow line. This is the most important part. So do not target the yellow line from now. If we break this point, then our target will be this yellow line. After reaching one of those red boxes, or the target of the Wolfie formation, the downtrend may continue. So if you are in a loss but didn't stop out of your positions, you can think about getting out of them or at least putting stop loss orders when the market bounces back a little bit. If you want to learn the deepest details of Luna crash or any other event which has happened recently, don't forget to write down to comments and follow our channel. And also, as I said earlier, you can join our Telegram channels. This is the end of our video. Thanks for watching. See you in our next video.